Hey, good morning, everybody. Glad you're able to join us on Monday. Hey, for the last full week of September. But glad you're here. Hope you had a great weekend. Looking forward to kind of winding down this quarter. Not a lot of economic stuff coming out and not a lot of individual stock stuff coming out today. So, Dave and I are going to have to figure out what we're going to talk about. But I'm glad you joined us. I'm sure we'll come out with something that's vitally important for our economic future. So, hang on, and Dave will be with us in just a moment.
5.7 Light FM. Good morning. It's 8:37 here. 23 before 9. Time checking on your money and maybe your travel plans here. Yeah. What's going on Wall Street? Let's go downtown to Phillip Statler at Statler Financial Services and see what he's got on the hopper for this morning. I understand a big travel agency went toes up on us, Phillip. Good morning.
Yeah, it did. There's a company, it's a UK company called Thomas Cook. They're a 178-year-old British travel company. They own some charter airlines, they own some hotels. They were just big in the travel industry. Well, they couldn't renegotiate their debt. And I saw a little blip on that on Friday, but they couldn't get it renegotiated. And basically, they folded up, went out of business, and closed up, leaving.
I remember Thomas Cook as being the oldest travel agency in the world. They were originally founded as a prohibition measure to take non-drinkers on clean-thinking tours, but they've expanded outward, and they're gone completely now, huh?
Completely gone. They stranded 650,000 travelers across the world trying to figure out how they're going to get home, because basically there were people flying in the air when this happened, and basically the pilots were instructed to land at the nearest airfield, wherever that was, and that was it. Boom, done. Walked away from the airplanes. Can you imagine?
So if you've got relatives out on vacation someplace and you're wondering where they are, maybe they got stranded in Botswana on a Thomas Cook plane, huh?
Exactly. I mean, that's kind of scary.
That really, it truly is. And you don't expect those great old names to just disappear, because there's always, or normally always, somebody that wants to at the very least pick up the name and give them the bridge financing to stay alive long enough to sell out, right?
Yeah. And so, but that did not happen. And so the UK, the country is working on getting their citizens back, which is like 150 or 170,000 people. The other people, it's all based on insurance companies trying to get them back to where they're supposed to be.
Good Lord. Boy, vacation interruption insurance does have some merit. Those machines in the airport do have some value to them, I guess, don't they?
I'm guessing so after what we're seeing here.
Kind of get that feeling. Backing up to Friday, that was news to me. I guess I was too busy watching football yesterday. Friday was an off day on Wall Street. We were down 159 points on the Dow. NASDAQ off by 65. Standard & Poor's was down by just under 15. And I really don't know a rational reason why, but we got a bad case of the jitters after the Chinese trade delegation canceled a visit to a bunch of our heavy agriculture states like Montana, Nebraska, and the like. They were going to go, basically, I gather, go look at soybeans, and they didn't. And all of a sudden, that gave somebody a case of the jitters, and no matter how many positive things our trade delegations on both sides of this say, it's not a problem. Boy, did we scare the crud out of the market on Friday, right?
Well, we did. It doesn't take much right now to kind of jitter these markets based on kind of what's happening. I mean, we're seeing this upward movement back towards highs, and people are looking for any reason to doubt that we're going the right direction. And so when you start talking about, oh, China's not coming over to do this thing they had planned, then that becomes a major deal, and traders get concerned.
Absolutely. I noticed both trade delegations were in full-blown damage control after that. One delegation said that, discussions have been productive. The other one said we've had constructive negotiations. Everybody's saying all the right, nice things. But like you say, it doesn't take a lot. Maybe they were flying Thomas Cook. Maybe that's why they canceled. Huh?
Maybe so. Hey, on another front, we've got a change coming in the S&P 500.
Ooh, what is it?
So on Thursday, we will add NVR. Now, it just says it's a home builder. So I went and looked, and it's in the same classification as Toll Brothers and KB Homes and Pullen, those guys. So it's a major home builder, and they're going to be part of the S&P 500 starting Thursday morning. And there's a company called Jefferies Financial Group, which is kind of a conglomerate of different financial companies, mortgage, even has some mining companies. They're being taken out of that process. And I find it kind of interesting because the price difference in those two companies. Jefferies is trading at like $19 a share. NVR is trading at $3,573 a share. Yeah.
They don't have a lot of shareholders, do they?
I guess not, but it's not price weighted. I understand that. It's capital weighted. So obviously the capital must be somewhat equivalent for the replacement. But that caught me by surprise.
Absolutely. It's kind of interesting, too, after all the jitters we've had in the home building market over the last couple of years, that one of them, at the very least in the publicly traded sector, has grown to the point now where they merit addition onto the 500 largest companies in the country. That tends toward being a good sign for the home building market that we've been kind of worried about, and with good reason.
Yeah, I think so. I mean, I think that's it is kind of interesting that we've got a company that is that big, that merits being called one of the 500 largest companies in the United States. So, we'll see how that changes the mix in the S&P 500.
Understood. We're not groping at straws wouldn't be the right term, but frankly, it is a rather quiet week. The big market mover for this week probably won't come until, I think, Thursday, when we get the final reading on the second quarter gross domestic product, Phillip. And that leaves us with a market that's grasping at things to make it move. A whole bunch of stuff going on that has kind of surprised me to date. That nothing has happened on, like the General Motors strike. We're 2 weeks strong into that right now, and we haven't even seen it covered in the news very much. I do notice now that steel stocks are starting to trade downward. The metal companies are now having some troubles, and their investors are starting to say, well, maybe they ought to be a little cheaper than they are. Other than that, it's one of those things that used to be an earth-shaking experience that we really aren't paying a lot of attention to this year.
Well, and I think just because this is the first one we've had for a while, there's other stuff going on that seems to be more important. But I'm thinking, Dave, if this thing continues on another week, it may raise itself up in the news cycle.
I got a hunch because there's some domino effect to a major manufacturing industry, even if it's not as big as it was 30 years ago, going into shutdown mode for a matter of 2 or 3 weeks at a stretch. That's got to have some domino impact.
I would think so. I mean, we know it does, right? Because there's all kinds of things that rely on the automakers, or at least they're a major part of their whole output. And so, if they're not working, they're not producing vehicles, then there's another whole industry of folks that are having to slow down.
Understood. The other thing that's kind of rearing its head on the horizon that may very well attract stockholders' attention this week is over in Europe. We had a bunch of economic reports out of the Eurozone this morning. Manufacturing numbers not meeting expectations. One of the more esoteric income measures, PMI, you had some comparisons there. You said Germany and France are about as bad as they've ever been, huh?
Well, they definitely are bad. I mean, they're at a 7-year low. And this one economist, he said, it's simply awful. It's just simply awful. So that must mean it's pretty bad, doggone bad. And then we've got, not just Germany, but French is in the same boat. Their PMI numbers missed across the board, and they were ugly also. So we're seeing some stuff there that they think that there's definitely a recession in the German manufacturing market, and they expect it to get worse.
Add that to the upset with Brexit and the Great Britain exit from the European market. Nobody knows what's going to happen with that. They're fighting their way through the courts in Great Britain. The auto industry in Europe put out a joint release this morning saying it would be catastrophic for England to leave the European community without a settlement because the auto industry would absolutely stink. Evidently, they're going to miss their Jaguars.
I don't know what the bottom line is there, but obviously, they've become a kind of a one unit economy, and by breaking things off, there's definitely going to be sectors that get hurt.
Absolutely. I guess the best analogy of this really would be if New York suddenly seceded from the Union without any kind of a settlement, not the biggest economy in the 50 states, but definitely an important one. And suddenly, if we didn't have New York, what would happen to our economy, right?
Well, exactly. You know, it's kind of the same thing. So we'll just have to keep plugging away and see how that Brexit, because I think Brexit, what they didn't have like a deadline of like the end of October or sometime in October. They were pushing their way out no matter what, and so I think the closer we get to that date is going to be kind of interesting to watch to see what happens over there.
Yeah, and Johnson has said they're gone on Halloween Day, no matter what happens, and that's got everybody in Parliament changing underwear and got Europe evidently doing the same darn thing. Resetting the table, kind of a negative day on Wall Street. On our side of the pond on Friday, 45 minutes before we open, Phillip, have we got any good news this morning from Wall Street?
Dave, it's pretty flat this morning. I mean, the Dow is down $45, which is less than 0.2. The S&P 500 is down less than 0.1. We got the Nasdaq basically flat. Gold is up about 0.7. Now here's the big mover. Oh my goodness! I just saw this. Silver up 3.1% to $18.41 an ounce. I don't know what's driving that baby.
Are the Hunt brothers back in business again?
I don't know. That's a huge increase. And we got oil basically flat at $58.04 a barrel.
All righty. Overseas markets doing about what you'd expect based on the lunacy that we were reporting over the weekend. Asia's mixed at the close early this morning. England and the rest of Europe pretty much engaged in a sellout. The German markets are down by over a full percent midway through their day. Britain is down, let's just say fractionally for the moment, halfway through their trading day. Phillip, we can't figure out what's going on. The big money people can't figure out what's going on. One thing we do know is everything is really, really touchy. That means stability in a retirement fund is important. How do I get some of that?
You're absolutely right, Dave. And one way to get some immediate help is to request our retirement strategy report. And all you have to do is text the word retirement to 863-285-3815. That's text the word retirement to 863-285-3815 to get that report right in your hands. Other than that, they can sit down with us and do a review of their current portfolio to make sure it lines up with their risk tolerance by calling us at 382-0037. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
You're everywhere, right?
We try.
Absolutely. And we'll see you tomorrow morning right here on Light FM. Phillip, thank you so much. We'll catch you then.
All right, man. You have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Have you done your...
Well, I guess we found something to talk about, a few things here and there. And I think the thing in Germany and France, the PMI index, I think that's just an indicator that they're continuing to lose some momentum over there and go in the wrong direction as far as their economy is concerned. Hey, remember, you can get your free report on retirement strategies by going to statlerfinancial.net/LM-3 to get your free report. Do it right now. I think you'll find it very beneficial for your retirement. Have a great day. I look forward to speaking to you again tomorrow.